Welcome to Risk Reconsidered. I'm your host, Sherry Elliker. Today we're bringing together two experts who approach natural catastrophes from different but equally important angles. Martin Buehler leads Swiss Re's large loss management team, which means he's responsible for quantifying the biggest insured loss events in the world. And Dr. Ann Cope is chief engineer at the Insurance Institute for Business and Home Safety, or IBHS. She and her team investigate why structures fail during natural disasters and how we can build them better so that individuals, communities, insurers, and reinsurers all have a fighting chance to reduce future losses. Swiss Re is a member of IBHS, so we've got two parts of the same risk ecosystem here. One team tracking the losses, the other trying to prevent them. Martin, Ann, thank you so much for being here. Before we dive in, though, could each of you give us a one-line description of what you do in your own words?
When large storms hit, wildfires burn, or any other large-scale catastrophes occur, somewhere in the world, it is our team on the front line trying to determine the financial impact to the insurance industry and to Swiss Re more or less in real time.
Thank you, Martin. Ann, what about you?
Hi there. Here at IBHS, I lead a team of experts, and we tear up buildings so that we can make our communities tougher against all the weather and the wildfires that Mother Nature throws our way.
Thank you, Ann. Back to you, Martin. The recent wildfires in Los Angeles were devastating. It's such a complex environment, urban, wildland, high-value assets. What makes it so challenging to quantify losses from a catastrophe like this?
I tend to think of loss events like snowflakes. They may look similar from a distance, but up close, each has their own unique characteristic and their inherent complexities. The LA wildfires were particularly challenging to quantify for several reasons. First, in the early days, the fires were still developing, which meant that the extent of damage we were trying to get our arms around was rapidly changing. Loss information from the ground was scarce, and the situation was literally evolving day by day. In these early days, we often look for comparisons to prior historical events when building out exposure analytics. However, in this instance, the sheer scale and intensity of the fires was so unique that most data points or experience we had at hand from past events became largely redundant. In addition to quantifying the structural property damage, we were also considering many other heads of claims, like smoke damage to properties outside the immediate fire perimeter, living expenses to support displaced residents, collector losses, such as fine art, high-value cars, wine collections, etc., that were lost in the fire. And that's just to name a few. So the real challenge here was getting our arms around the combined picture, the obvious large-scale destruction alongside diverse and at times compounding, but less obvious uncertainties.
And from your vantage point, what are the early engineering takeaways from the Los Angeles fires?
So I find this question really interesting because from Martin's perspective, very different, very unique. And what's fascinating to me from the engineering's perspective, this was a clear example of what we have already seen, sadly, in both the laboratory and other field events. It confirms that there are three factors that lead to the likelihood of conflagration. So on the likelihood, these are three aspects that we see over and over and over again. LA, Lahaina, Marshall, Camp. There is a combination of some sort of drought, whether it's prolonged drought or flash drought. There's a density of population, and there is a high wind event that impacts both the spark, the spread, and the ability of the fire service to be able to counter the event. So winds, drought, and dense population are going to lead to the likelihood. And then the aspects of severity are the structure density, how close the things are together, the amount of connectivity in between them, bushes, hedges, fences, and the building materials. So as we see the likelihood play out and the spark take place, then it's how close, how connected, and what are the buildings made of that are going to lead to the severity and the vast extent of the fire.
I watched the video of what you guys do at your laboratory in South Carolina, and it's unbelievably compelling, where your teams can simulate a variety of destructive perils in real time. Can you tell us what kinds of simulations you're doing there to help us understand how wildfire affects structures?
Sure. So this facility was built in 2009. We opened in 2010. So we're about to celebrate our 15th anniversary of the facility producing science. We are completely sponsored by the insurance industry. So Swiss Re is a fantastic member, and many other individual insurers and reinsurers are funding the research. We have 105 fans. Each one is taller than me and a 350 horsepower motor. All of those fans put together, we can recreate Category 3 hurricanes, the type of Santa Ana winds that you're going to see in a wildfire environment. And we have specially designed ember generators to produce those burning firebrands that float through the air and cause so many of the home ignitions. So we are replicating what Mother Nature is doing right here in a controlled laboratory environment in full scale with big actual buildings that people could have been living in, so that we can find those nuggets of science, figure out how to guide people and impact our building codes.
Martin, it's not the first major fire event in California. Why is the state so consistently vulnerable?
You're right, Sherry. Wildfires are nothing new to California. California has always been prone to wildfires. But the situation has clearly gotten worse, say over the last decade, where the frequency as well as the intensity of fires actually have increased, making the state probably more vulnerable than ever before. Let me share a few details to explain why that's the case. First, areas where buildings and wildland vegetation meet or intermingle, also known as wildland-urban interfaces, play a major role. As more and more people build in these areas, or these previously considered remote or wild areas, the number of structures at risk increases. This influx of structures also increases the number of potential fire ignition sources, and that's further aggravated by the increased fuel load from these structures that can cause fires to spread even more quickly. Second, economic growth and inflation also play a key role. As California's economy has grown, the asset values at risk have grown in step. Third, climate is fueling the situation also. Changing climatic conditions lead to a longer wildfire season in California, simply increasing the probability of a fire occurring. Rainfall has become more erratic, leading to times of very high vegetation growth, followed by prolonged droughts, creating a vast, extremely dry, highly flammable landscape just waiting for a spark. And lastly, California's rugged, steep terrain and unique wind pattern complicate firefighting efforts. For example, the warm, dry Santa Ana winds can reach hurricane-force speeds, spreading fires rapidly and making containment efforts, especially those airborne containment methods, extremely difficult, as we saw, unfortunately, this January.
And from an engineering perspective, what makes California such a potent NatCat threat environment? And what's the path forward to make its built environment more resilient?
I would echo many of the things that Martin just described. The flash drought, you have high vegetation growth, and then suddenly it's dry and ready for that spark, and you get the high winds, and then boom, off to the races. The bad news is we should anticipate more times that ignitions will happen in the wildland environment. And the good news is we don't have to let that be a tragedy for our built environment. There are absolutely things that you can do right now. Every homeowner in California can do these things in their own yard right now. The 0 to 5 feet or just 2.5 meters in front of your house, that is the most critical spot where the embers will float and then they will catch in your landscaping and try to ignite your house. So having things right next to the house is one of the most critical vulnerabilities. And it's the one that the homeowner can take care of and move and change. So we've got some great guidance out there about how do you change the landscaping? How do you make sure that you have ember resistant vents? Go to wildfireprepared.org and find those pieces of information. And the first and foremost thing is don't be overwhelmed. Read the information and start today. Make a plan and do individual step-by-step. Get your whole neighborhood involved. You can do this. It is absolutely possible. And then if the wildland catches and the embers come through your neighborhood, they just go through the neighborhood and they don't ignite the homes. And you live on to the next day without that tragedy occurring.
Let's zoom out for a little bit and talk about the bigger threat landscape. California isn't just vulnerable to wildfire, it's a multi-threat environment. Earthquakes, floods, heavy rains. And it's the 5th largest economy in the world. That is a lot of valuable exposure. So, Martin, this combination of high-value assets and multiple natural hazards must make California a very important area for your team to track.
Absolutely, Sherry. It's been on the radar of our team for a long while already. And as you mentioned, the state brings along areas of extremely high asset concentration, but at the same time is also prone to multiple serious natural hazards and has a relatively high degree of insurance coverage. And of course, besides the wildfire threat, there's always the earthquake threat out there looming as well, which luckily we haven't seen to date in a large scale.
And does having so many different threats make it harder for homeowners and communities to prepare effectively for each one?
Well, I think the combination can feel overwhelming to homeowners. Oh, there's so much I can do. I'm just not going to do anything and just accept whatever is going to happen. So that's the mentality that we want to avoid. I would tell people, just simply know if you live right near the fault line, take care of that first. And for earthquakes, it's all about the connections. Was your house built to code and is it properly connected? Or is the house older and needs to get retrofitted? That's what you got to worry about for earthquakes. So if you live close to the fault line, go find out. And if you live in the areas that Martin was describing earlier, those intermix and interface areas where you're close to the beautiful natural landscape, then wildfire is the thing that you want to tackle first. So go and get the information from wildfireprepared.org, make your plan, and make sure that your roof is Class A, your vents are ember resistant, and you take care of those landscaping. You can do these things. The worst thing you can do is be uninformed. And the best thing you can do is step number 1.
This is a good moment to take a short detour now to speak with Nancy Wallace, a professor from the University of California, Berkeley, who has been following insurance challenges that California faces. And when we come back, we'll dive into how reinsurers and their risk partners are building smarter defenses against not just wildfire, but all kinds of natural catastrophes. For many years now, Professor Wallace has examined how the California insurance market developed, what went wrong, and potential solutions to the current challenges. Professor Wallace, thanks so much for joining us. You actually have a personal story about wildfires. What can you tell us about what happened?
Well, thank you for having me. Yes, I do. In 1991, there was a major fire up above the university where a lot of faculty housing exists. There were a lot of Monterey pines. There were a lot of eucalyptus. It was beautiful. I had never known anyone whose home had burned down. So it never even crossed my mind it was a problem. Obviously, we were insured, but it happened extremely suddenly on a Sunday afternoon. The barometer absolutely sank. And what happened is it churned up all these ovens around the Monterey pines, which were buried embers from the prior fire, and it rekindled the fire. And it moved very fast. Many people tried to use their hoses, do the same things you heard in Pacific Palisades. At the time, we were told it was a 100-year event. And unfortunately, that prediction has proven to be quite incorrect because climate change has really affected things.
Professor Wallace, can you provide a little historical perspective on the challenges the California property insurance market now faces?
So this is a regulatory failure. So there was a proposition that was passed in 1988, and two of the important features of Prop 103 were requirements, and any rate increase had to be approved by the California Department of Insurance. The department imposed a prohibition on the use of probabilistic models. What they required was backward-looking averages. So for firms to justify their rate increases, they had to base that request on a 20-year backward-looking average of their actual loss ratio. So rates piled up, and the whole system basically came to a screeching halt in December of 2023. And at that point, there was intervention by the governor requiring the commissioner to rethink how this process was working and to come up with some better processes and policies to enable insurance companies to survive.
California's legislature and its Department of Insurance have implemented a number of changes, seeking to restore a functioning market. Do you see those as helpful, and if so, how?
I see them as absolutely crucial. And there are policies, but they're in their infancy. Many of them are not as fully developed as is needed. One of these is something called Safer from Wildfire, which is a pact between the insurance companies and homeowners, because the magnitude of these fires have led to $20 billion loss events. And there are no private companies, no equity markets that can support that kind of loss event year after year. So we have to think about spreading some of this risk to the shoulders of homeowners in the form of thinking very carefully about the risks that their own homes present. It has a lot to do with your vegetation and whether or not you have what are called defensible spaces around your home. Once fires start spreading, there are two primary transmission mechanisms, embers, that are falling down as tiny little bits of fire, resting on roofs. So fireproof roofs are a very important potential mitigant to stop the spread of these hot fires. So roof mitigation, or replacing non-fireproof roofs, is an important part of this potential pact. Another feature is radiant heat. So if you don't have double pane glass, your home is going to absorb this unbelievable heat. So the need to improve the windows and turn them double pane, improve the roofs, and other things that are in the weeds of mitigation are really required. The problem is those are expensive retrofits. The average home age in California is 45 years old. Our building codes were changed in 2008 to require fireproof roofs. So we potentially have lots of homes without fireproof roofs. We need some way of helping people fund that. And devising mortgage markets. I work on the mortgage markets. That's my research area. This is something that can be created to help people and basically be another channel by which we can reduce these risks. Right now, without this market, we're asking people to find $20,000, $40,000, $50,000 to do this kind of mitigation. It's simply not a reasonable ask.
You are working with a team of experts on a proposal aimed at freeing up more money for homeowners to make necessary fire safety upgrades to their homes. Can you describe how that might work and what the next steps could be?
Sure. So in California, we have legislation that allows cities to use taxes, property taxes, for things like energy efficiency investments. They can also be used to do community, a smaller neighborhood level retrofitting. So a very similar thing can be used to do mitigation liens. So these are basically funded by your property taxes, and you could use the lien to do, say, improvement on your roof. So you could borrow the money and then pay it back on installment as part of your property tax. And it would enable people to take measures now to reduce the risk that their homes burn. Why should the capital markets like this? Well, it should be better for the banks because the whole reason we have property and casualty insurance is to protect their collateral, which is the houses. It should be better for insurance companies because they simply cannot cover these extreme losses in high residential or highly developed areas. And it should help the state because the state, too, is on the hook for extensive fire mitigation activities, And anything we can do to reduce these losses, which affects the tax base, it affects employment, it affects businesses. So we need subsidies for communities that simply cannot afford this to help people mitigate, to use dollars wisely for a menu of allowed things to reduce the fire risk around these properties.
Professor Wallace, if you were advising other insurance markets, what do you see as the biggest lessons they can take away from California?
Fire is a very hard, a very challenging risk to measure. That is the truth. I did a lot of work right after the financial crisis on developing the risk validation models for the Federal Reserve and for the banks that they now use post the financial crisis. So having risk mitigation infrastructure has proved enormously important for our banking sector. And truthfully, this same kind of development can prove enormously important for the insurance industry. We need all to be working together, scientists, social scientists like me, the banking sector, the insurance industry, to both measure this risk accurately, to price it realistically, and to help people lessen their risk exposures by offering them products that will enable them to afford it.
Professor Nancy Wallace, fascinating conversation. Thank you so much for being with us today.
It's a pleasure. Thank you for having me.
Defending against the next big one. Let's talk about that. Boosting our defenses against natural catastrophes is a complex, shared responsibility, from property owners to policymakers, insurers, and reinsurers. And it's not just about wildfires. This also applies to hurricanes, tornadoes, and hailstorms, too. And back to your lab, you're not just studying wildfire. What other natural hazards do you simulate there? And what have you learned from those tests?
Sure. So we can simulate high winds and wind-driven rain that you would see in hurricanes, cyclones, derechos, thunderstorms. We use that research about the heavy winds and rain to develop a protocol called our fortified system. So the fortified system, even if you live in an area that doesn't have a strong building code, you can use these voluntary standards to make sure that your home or your business is ready for those hurricane force winds and driving rains that Mother Nature is going to bring. And then the other aspect that we study that is such a loss driver in the middle portion of the United States is hail. Hail is a billion-dollar problem every single year. The past 2 years have been really bad for severe convective storm, both 2023 and 2024. So we are studying how hail is impacting the different roofing materials so we can point out which ones do well and which ones are poor performers against the type of hail you're going to see every single year so that insurers and homeowners have that information and can make choices that are informed by those decisions.
Martin, we've seen hail and severe convective storms become major loss drivers recently. The storm that hit Calgary in the summer of 2024 is just one example. What is the most expensive catastrophe on insurers' radar today, and how is that evolving?
Indeed, and as Anne said before, hail is the big topic, at least in aggregate, for insurers and reinsurers these days. It accounts for much of today's insured losses across the globe, actually. And as you mentioned, one of the prominent examples in 2024 was the Calgary storm. Recently, we have also been seeing a change in vulnerability and resilience too. Modern assets, such as solar panels or advanced insulation materials, while more energy efficient and designed with positive intent to help us mitigate climate change, are also more susceptible to severe weather damage. Another easy example is the higher replacement cost for car windshields that were damaged by a hail event. Modern windshields now have advanced built-in technology like rain sensors, lane departure warnings, heads-up displays. These features, they help us as consumers, but they obviously make the replacement process much more complex and expensive. Then lastly, there's the bullseye effect, which is another critical factor. Cities and suburban communities are simply growing, and with larger houses being built on smaller lots. This simply increases the target area for a severe convective storm, making it easier than ever for these storms to cause significant economic damage.
And Martin, if you look at the big picture, what are the primary ways that society has to manage large-scale risks? And how are reinsurers like Swiss Re partnering with their clients to do this?
Risk management is complex. And unfortunately, there is no simple answer here. But there is a concept in risk management called avoid, reduce, transfer, and accept. Per this strategy, the most effective risk management option is to avoid the risk entirely. For example, not building your new home in a high-risk, high-hazard area. But of course, this is not always possible or realistic. In that case, reducing risk by taking steps to minimize the impact or the likelihood is your next best option. I refer there to the papers highlighted by Anne on how you can make your building better, more resistant. Following this, remaining risks can be transferred and covered through insurance by buying an insurance policy. There is, however, always some residual risk you just have to accept and take on. Swiss Re does have vast experience in risk management and can contribute to all areas of mitigation. For example, our CatNet tool offers high-resolution data on various natural hazards to visualize and better understand the specific risks associated with a particular area or region. Additionally, the research done by the Swiss Re Institute, as well as participations in groups such as the IBHS, supports risk reduction. Our main business, however, is of course the risk transfer, so helping clients manage and mitigate their risks through insurance and reinsurance products. I'll finish by adding that the most effective risk management program is a collaborative effort between governments, between businesses, between individuals, between researchers and the insurance industry. The better this partnership, the more resilient we become as a society.
And here you and your organization play a big role in this equation as well. How does the research you do at IBHS make its way into building codes and standards?
So the research that we do here, as we publicize it and IBHS experts go to the international code committees here in the United States, we interact with colleagues in Canada, Europe, Australia, to make sure that what we are learning here has an opportunity to inform those building codes across the globe where things like wildfire, bushfire, hail, high winds, and driving rain, it's really important for insurers and reinsurers to know there is not a national building code. So we get our information into those model building codes, but then it's up to the local state or even down to the county or local jurisdiction to actually adopt, enforce, and apply the engineering science that is learned and known. So I just caution insurers, we have great engineering that is available, and it's not always in use. So we have demonstrated by publishing reports called Rating the States, or Living with Wildfire, so that insurers and reinsurers can know which states and local jurisdictions are picking up that science and using it, and which ones are not.
Anne, Martin, thank you so much for this really interesting and very informative conversation. It's clear that preventing future losses isn't just about reacting to catastrophes, but using data and science to understand the forces behind them and investing in resilience. Really great to have you both on.
Thank you.
Thanks a lot.